Hello, and another exciting day in the world of economics and markets. A couple of things. First of all, US inflation data is coming out over the next 24 hours, and that's, of course, something the market will focus on. I myself think inflation could actually be even better than people expect because I feel that the US economy is slowing more than most people understand, and therefore price competitive pressures are coming back into the economy like the tsunami that was inflation. We're going to have the tsunami of competitive price pressures, which is a nice return. So that could be good for the US equity market on the day and global Western equity markets generally as they follow mindlessly the maneuverings of the US stock exchange. But we're also seeing cracks. We've seen this incredible narrowing of the rally, which I've spoken of before, into just a few tech stocks really. A little bit of broadening of the breadth of the rally recently with the Russell 2000 index looking good. But again, even Nvidia yesterday, a little bit of a warning sign there in that price action, a little bit of rejection. We've seen rejections like that before and the market still kicked on. But you've got to be mindful that one of these little rejections is going to turn into something bigger. Not because the Nvidia company is going to fail or they're going to produce less chips, which are highly valued in this world of AI at the moment. But like Tesla, you can have a great technology, you can be top of your game, and your stock price can still fall because everyone who wants to buy it has bought it, or people have become over leveraged long, or they've just got too excited about the profit outlook for that company over the medium to long term. So for all of those reasons, or just some big fund goes, oh, we've got tremendous profits on the board over the last year or two, why don't we take some of those profits? And that creates a self-fulfilling snowball effect to the downside. So I'm still cautious equities. Yes, you do have to be a little bit long, but I'm cautious. The other things, I'm still short the US 10-year bond, still think yields can go higher. The US has to pay more for being such a debtor nation and having such a severe fiscal ongoing rolling crisis. The reasons, as I said, I'm a little bit bearish the US economy. Manufacturing's been a diabolical state. I know a lot was made about the services PMI or the overall PMI for the US picking up in the last data release, but it's still well below what is our healthy economy level. So it's in expansion, but it's not in the healthy zone, which is really 55 to 65. That's where up towards high 50s at least is where that services PMI usually is when the economy is healthy, and it's not there at the moment. But still some encouraging signs. I think we're seeing stability in the US economy. As I said, manufacturing's been in a diabolical state. Basically, manufacturing and housing have been in recession for about a year. And there's some stability to them because, I mean, I just can't keep contracting. But industrial production's been very bad as well in the US. So that's why I'm a little bit worried about the US economy. I'm also worried about it because I think there is going to be consumer exhaustion from these higher prices, because even if inflation is coming down, you're not seeing all of those prices retreat. Also, the global oil price is my favorite trade at the moment. I think I've got 3 longs in the crude index. So just keep buying oil. I think I am. I'm a cautiously long gold, but it's struggling because there was so much speculation over recent geopolitical tensions that a lot of those positions have had to be unwound. The US dollar, I want to sell it. But if there are ongoing geopolitical tensions, people are going to want to buy it. And also, as the US has to pay more for debt, buying that debt becomes more attractive. So that's actually a sort of roundabout way for US dollar strength as well. So I'm in two minds, and I'm often short and I'm often long the US dollar. I'm trying to figure it out. But I think for the moment, it's probably going to be stronger on the back of ongoing geopolitical tensions and that higher yield. I also think a lot of money is pouring in from the rest of the world into companies like Nvidia. So that supports currency as well. In terms of the Australian stock market, as I've been highlighting, major underperformer relative to the strength seen elsewhere. And that is showing an underlying fundamental weakness, because how strong can the Australian dollar or the Australian stock market be in what is still a slow global economy and not all that great an outlook? So very cautious on the Australian situation, cautious on equities, but I do have some longs, some shorts. I took profits on my Disney longs, by the way. I'm short Tesla, and I'm looking to sell a company like BlackRock or Goldman Sachs if they start to break lower. In fact, I just sold a little Goldman's this morning. So that's how I see the world at the moment. That inflation number, it's probably going to be a lower print than 3, but if it's higher, equities could really suffer. Have a great day. Thank you for listening. Oh, don't forget to go to my website, cliffordbennett.com.au. Get some free work. See you.